Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. Roll time, right? Good God. We can't look at this, guys. Like my strategy is, you buy it and you hope that you get its path. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out, and you don't think that anything will be wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is Friday. We got some important numbers coming up here. It's been a week though. I got to tell you, I'm curious to see how this all ends. I mean, interest rates have just really collapsed this week, but the S&P 500 is doing really well. Also, so let's just look at what we got in the charts. I don't know if I'm really going to be taking trades today. I'm still like, I'm not super happy about the liquidity situation. I'm coming over here. I just show you real quick. In August, there's still not a whole lot of orders out there, but even in July, it's like a little bit more sparse than usual. Let me come back over here. Go back to July 10Y. So, I think we could potentially, I mean, they're there, but it's not, there's not all of these guys in the back here, right? There's only like 3 lots over here in the start. So we're kind of in a weird situation, right? All right. Coming back over here to the charts. Where's my volume profile? Oh, I got a rollover. Oh, Ethereum. Sure. Okay. So you can see here, yesterday, treasuries really moving up on that GDP news and everything, and giving up a little bit of their gains, but not too much. Meanwhile, the S&P 500 just jumping. And after hours, Apple and Amazon earnings, both great blowout earnings, and markets really liked that. Oil's still within a range. Just kind of curious there that they can't get back above 100. Natural gas cooling off a little bit. Gold and silver are having a good run though. I mean, if they could get back into the 1800s in gold, I think that would be that. You know, that's maybe more like where it should be anyways, right? Silver doing good. Kappa, I mean, it's okay, but I mean, look, that looks like a flag, you know. It's not very strong upside action in Kappa. And then we got to come to the dollar. It still seems to me that the dollar is kind of one of the big things holding things back. They are below 106, but I mean, man, can you remember back when we were 100? That's just crazy to think about how much the dollar has moved up this year. And then Bitcoin actually was pushing up to new highs here. So it seems to be reacting well to the treasuries kind of pushing here. So we'll see. All right. So what do we got? What's the news that's coming up here? We're going to get personal income and personal spending. So personal spending is expected to be spot 9, which by the way is relatively high. Okay. I could see that number coming in low. I really could. And personal income spot 5. Again, these are numbers that are normally like spot 3, right? So if either of those numbers are higher than expected though, you could see rates come right back. Yeah. Also, later today, we're going to get Chicago PMI, which is an important number. And remember, that's the one that gets released early. Oh, yeah. We get PCE price index. That's the big one. There you go. U.S. core PCE price index, month over month. They're looking for a reading of spot 5. So that's where we're at. I feel like that my microphone is like not right. I don't know what the deal here is. It feels like it's twisted or something. But it looks fine, right? Yeah, it looks fine. I don't know what the deal is. Well, I'll turn it up a little bit like that. That might help a little bit. Okay, so we got about a minute come through here. I'll leave it like this. Then afterwards, we can turn the music on if you want. I guess I will. We'll watch it. I don't really like the liquidity here. I don't expect there to be any liquidity there when we hit it. So we're just we'll watch it though. Maybe we get lucky. That's been one of the most frustrating things with the micro treasuries has been around the rollovers. There's been some good moves at the end of the month, but it's kind of sketchy. Yeah, only 5 lots. Yeah, we're not. I'm not touching that. That's pretty silly. Good morning, Octavius. By the way, 20 seconds. Absolutely no liquidity in the micros. They are pushing down here though. Okay, so I'm getting PCE price index 1% versus an expected spot 9. Okay, personal consumer spending higher than expected 1%. Personal income spot 6. This is, yeah. These are bad inflation numbers. I wouldn't be surprised. I'm probably being a little overly dramatic here, but those are the kind of numbers that I think could make the market start thinking about going back to 3% again. Right? Like if people are still, like, we're going into a recession supposedly, but like people are still spending a lot of money. These numbers really significantly contradict the narrative that we've had. Well, looks like if I did took a bad spot. Let's see here. They did sell it though. There was pretty solid volume on the sell in the treasuries. In fact, that was actually really solid downside sell volume in the treasuries. And I think that at the moment the E-mini is maybe underreacting a little bit. I think that the move there in the ES was appropriate. There is a pretty ugly pullback here. I don't know if it's that bad, but so let's just go back through these again. Consumer spending was 1.1% versus a previous reading of spot 2 and an expected reading of spot 9, right? Personal income was spot 6 versus an expected spot 5 and a previous reading of spot 5. So both spending and income went up compared to June, right? And is relatively hot. Like 1.1% is hot. Okay. Employment costs went up 1.3% versus expected 1.2%. Core PCE price index, again, the Federal Reserve's favored inflation measure, spot 6 versus an expected spot 5. So the numbers that we got were all basically in the same direction and all suggested that inflation is hot in July. Okay. Now, I think the counter argument to this would be that the economy is getting weaker, and that the August and September numbers aren't going to be as strong. But for now, there does not appear to be any sign of inflationary pressures letting up. They still appear quite hot. The S&P 500 is selling on this news, and they are touching 4090 now. If interest rates stay below, well, I took it at 2.73, so let's just kind of use that as our yeah, it is the last trading day of the month. I have that in the title. Um we could see, so with rebalancing, well, for this month, if we're looking at like rebalancing behavior, I think it's kind of difficult for us to sort what would happen. So for the month of July, generally speaking, we are quite a bit higher in the treasuries than we were. So if you had gains in the treasuries, you're going to sell some of your treasuries and you're going to buy some of your equities. But equities were up really good too. You're going to sell some of your equities and you're going to buy some treasuries, right? So I don't know how those numbers sort out. It could be that today is a buy for the treasuries. It does look to me. Well, I think some of this is, well, no, that's sort of really interesting. The 6J just got absolutely killed and is pushing down quite aggressively. So the treasuries pushing up here, close to the regular session open prices, seems to be an aberration. I mean, it's the only one doing it at the moment. And not only that, but there just really isn't volume behind it. So it really looks to me for the moment that this is them sliding back into the liquidity hole, because they basically came right back to where we were before the news, right? See that the movement up would kind of make me think, well, maybe it's moving up because of end of month rebalancing, but it's not actually the volume behind it, right? So I can't see that yet. Like overall, the tape isn't giving me very many answers. Not giving me very many answers. It's moving quite randomly, quite easily, able to tick both up and down. It just so happens that they ticked up more than they ticked down, and I don't know if there's really any good reason for that. Let's sort that out a little bit better. Could be a little bit of, buying from the equity weakness, but I don't know. Those correlations don't really make sense given the news that we saw. So that's kind of interesting. But you know what? As is often the case, right? On Fridays we get this sort of thing, right? It's been a long time. I can't remember the last time that we had like an end of month like on a Friday. So there's that in play too. Hmm. I'm also not, well, there was some flattening. There was some flattening. That is actually quite curious. I'm looking at this. I'm looking at my charts. There's no way that I would have said that there was that much flattening off of that move. How can that be? They all look like they all just came back to where they were. You see that? Like it ticks up. It's too easy. Darn. Well, that kind of sucks. I mean, I think that I tried for the, well, I wouldn't call it a YOLO trade, but I tried for the trade and it didn't continue through like I had hoped. So I got myself a very bad position. But now it really is pushing up and it's really on like quite light volume. I'm not It's very interesting. Very interesting. There was a few relatively large transactions there in the micros, trading hands at 2.705 and 2.7. So, geez. Yeah, that was the worst trade I could have taken in the micros. Right? So, what's their take here? Because the market, I don't know. This could be that the news didn't matter, right? Something else is going on. But I'm kind of suspecting that maybe the market is not interpreting this news the same way that I am, right? Okay, savings rate plunges. Zero Hedge says. Here we go again. Record container ship traffic jam as backlog continues. I don't know. That's an odd headline to be getting today, too. The Fed's favorite inflation indicator, PEC deflator, was expected to accelerate in June, and both the headline and core increased significantly, both higher than expected. The headline print is the highest since 1982. With both the headline and core inflation signals re-accelerating, it appears the peak inflation narrative has busted once again. The inflation indicator has supported nominal personal spending, even as incomes fail to keep pace with soaring revolving credit, signaling Americans relying on credit cards to get by. Nominal spending rose 1.1% month over month, while incomes rose only 0.6% month over month. Real personal spending managed a measly increase of 0.1% month over month in June, which leaves real spending up just 1.6% year over year. On the income side, both private and government wages saw slow growth in June. Private wages rose 11.2%, down from 11.9% in May and the lowest since March 2021, while government wages rose 4.8%, down from 5.4% and the lowest since March of 2021. Finally, the savings rate tumbled to just 5.1%, the lowest since August of 2009. No, the fact that Americans are borrowing more and saving less is not an indication of confidence. It's an indication of deep-seated stress, which explains the record low in consumers' confidence. Well, the micros are the thinnest thing I've ever seen. Well, So right now you got like a 3 tick spread, but you do have like hundreds around the outside. So for a retail trader, there's more than enough um, volume for you to execute against. Although I think you got to be a little bit careful about how you execute. So like when I executed, obviously, look, I mean, this is so embarrassing, right? I took a trade I bought at 2.73. So I was the highest buy essentially, right? But when I hit it, if you go back and you look, when I hit it, they pulled. And so the offer was quite a bit above me. So I was able to, um, catch the edge per se, right? So that's the first thing, is that you do have to be careful about how you execute it over here. But generally speaking, I mean, the oscillations that you can get from these matter more than you and your effect on the liquidity, right? Just don't trade like huge lots. So now some of these other ones are terrible. This 5-year continues to be really bad. I don't know why the spread on the 5-year tends to be so bad, but it just is. People don't seem to be trading it. It's like they would rather go to the 2. So it's like the 2, the 10, and the 30 are the places that nobody's interested in playing the 5. Okay, well, whatever. Time might come where that matters more. We'll see. But I think that it will continue to improve. This right now is not what it normally is. It's lower than what it normally is because of the end of month, because this is basically rollover for micros, right? When there's a 2 to 3 tick spread, well, that kind of comes with the territory. What 10 ticks I think is nasty, because that's like your average trade sometimes, right? Well, at the moment, it's kind of looking like they just wanted to shake me out, man. See, look at that. Are they going to get sucked back into 21? I'm feeling like I really want to buy it in here now, but I also kind of feel like that I run the risk of going on tilt here. Because what if that's not it, and then they push back up again? I think that the timing is wrong, and that if we are going to get a rise in rates here, that there's going to be plenty of opportunity for me to try and jump on board. Anyways, but here's the larger thing that I would think about in regards to the tick. Okay, I think there's this really pernicious idea out there in society right now that basically you can't make money. You can only take money from other people. Andrew Tate, I think, is the biggest person kind of promulgating this idea. And I disagree with that idea for one key reason, and that is that value is a real thing. Okay, people might not be able to agree on value, but it is a real thing that exists regardless of what other people think. Okay, if you go and you come up with a great idea that of a new technology that is valuable. That technology is valuable regardless of what other people think at the time, and regardless of whether or not you're making money from it, right? You have farmland. That farmland has value. It can potentially create resources that are valuable to people, like food, regardless of whether you're actually utilizing that land. Right? So value is a thing. The key is you generate something of value, and then you've got to figure out how to actually get its value's worth. if not more, right? But if you're not creating value, and that's what a lot of these people are doing, is they're creating things that aren't very valuable, or maybe they do have some value, but it's not very much, and what they are selling it for is a lot more than what its actual value is. And when you do that, you are not adding to society. You are just a leech on society, right? People are promoting being rent seekers, essentially. And I don't like that at all. I don't really talk about like my purpose so much. I should. Probably I should. Okay, because I worked for Goldman, and they have a purpose, and I liked it, and I think that even though I don't work there anymore, I continued to follow those ideals and those values. They want to create economic opportunity, economic growth and opportunity. And I think that our goals here are the same, but the way that we do that is by more efficient pricing of assets, right? So that's an important thing, and that's an valuable thing, but get you might not get the value out of it, right? Because of a lack of skill, lack of resources, or just bad luck, right? So when you look here at the micro treasury futures, there is value in trading the micro treasury futures. I am sure of that. Okay. Having more transparency and accuracy in benchmark interest rates is a very, very valuable thing to the market. And having the ability to make very easy spread trades without having to go through all of the math to make sure that all of your exposures are equalized and all that sort of junk, right? You just come in and you just say, I want to do the 2 and 10, one contractor. That's valuable, right? So it doesn't necessarily matter if other people see that value right now, or if we are getting very much out of the value from it right now. It is valuable, and I believe quite strongly that if you stick with the micro treasury futures, that in a few years you're going to see a lot more people trading them, and there's going to be all these people that dismissed the micro treasuries when they first came out. They're going to be like, oh man, I could have made a market and built myself up and my account up from trading these micro treasuries, and I missed that opportunity. I could have been spending all of this time learning more about the treasuries and the treasury market and spreads in particular, and I didn't, and I wasted it. Thank you for streaming every day. Is a great. Thank you, Octavius, and you're here every day and you contribute a lot to the channel, so I really appreciate it too. Why not trade the ZN like you used to? Because the micro treasuries are less risk, and I quite like that about them. Like honestly, I could throw $10,000 into the treasuries, into the 10-year, and I think that it would that would be a little bit of a strain on me financially, but I could pull it off, right? But I mean, even when I'm doing well, right? The amount of money that you make from it from what we're doing is tiny. Like the issue is that to really get like big money, like if I'm gonna put $10,000 in it, I want to turn it into like $20,000, right? You're taking on a lot of risk to do that, right? And your chances of eventually blowing up to do that are really high, right? So I am so much more comfortable, and I am so much happier when the amount of risk that I am taking on is in line with, what should I say, in line? I shouldn't say that, because I don't know if it's in line with like my ability and everything else. I'm so much more comfortable trading when the amount that I'm taking on, the risk I'm taking on, is just low. Okay. And so to come in and take a trade and lose $30 And I might take another one later today, although I'm definitely made the right choice on staying out, even though I felt the desire to get in. But my reading of the timing and the market's desire to trade this would seem to be in line. They're kind of equalizing around maybe 23. So if we do take another trade, it might be before the E-mini opens up and we can see which direction they go. I'm not, I think that I'm kind of feeling like I want to or what about MES? MES just had too much range, man. But not just that, but I don't see how you gain an edge in MES. Not on a day-to-day basis, at least. Like there are times where the indexes you can get a good trade on the indexes where something and you can take a trade, but there's just so much noise involved in it, first of all. So like even if you do have a really good edge there, the noise might still screw you up. But then most of the time, who knows what it's going to do. And what I see is a lot of retail traders just trading it on noise. And some of them think that they're expert E-mini traders, even though they're just trading noise. And they're essentially just taking advantage of kurtosis in distributions, and eventually that catches up to them. So I don't think that is a... you're trading noise, you're not learning anything. You know what I mean? So to me, that felt like a waste of time. I think I'm much happier trading these micro treasuries. And again, the micro treasuries are way less risk, right? Like you can trade ES, but like your average move in ES these days is 10 points, right? So you're making or losing $50 easy. Whereas here, for me to lose $30, that's a relatively large loss, right? That only really occurred because I took the exact opposite trade, the exactly wrong trade in a relatively strained market. So, $30 is a unusually large loss, right? And that's the maximum, whereas that's like below what your average loss would be in MES futures, right? So again, I think that I am and to the larger point here. Oh, by the way, you want some music? Let's turn on the music a little bit. I feel like we could use some music. I think that I'm a little neurotic, I think that especially when I'm on a losing streak, man, really messes with me, man. And my decision making and everything just goes down. I mean, if you can't tell, I'm a little frazzled. I would rather a loss be $20, right? $30 loss is a little bit more than I would want. And I was holding that risk because I felt that the situation called for it. I'm okay with it. I'm okay with it though, right? Like I can take that, even though it's a loss, and I can feel that I'm a little bit, I shouldn't say frazzled, but I'm certainly not like on my game at the moment, right? Certainly not on my best game at the moment, right? But I'm okay. I can go and we can do stuff over the weekend and it won't bother me. You know what I mean? Whereas if I trade e-micros and I lose $500 in a day from being stupid, that just totally destroys me, man. that's I'm gonna be moping around all weekend and that sort of a thing. But look, I think that I've developed a pretty decent edge in the micro treasury futures. I have been doing well the last year and, well, not a year, let's say 6 months. And where I've not been doing well, I think has more to do with my own stupidity and experimentation in particular. Experimentation is where I've taken my biggest losses. And not so much my core edge, right? So that's the bigger thing, is that, again, you should select an instrument based on your ability to find an edge in that market. I think that there's a lot of opportunities for a retail trader to find edge in the treasury market compared to other markets, right? I think that you probably could develop the same amount of edge in ES, but it's going to have to be different stuff. Because really, there's a lot of randomness over there. How do you overcome that randomness in the indexes? You know what I mean? You know what? There's another reason too. And that is that I think that if you're a beginning trader, like I said in the video that I put out on Monday, right? You're a beginner trading. You've just gotten into markets. You've never traded before. This is your first year trading or whatever, right? The chances of you making money from it are practically nil. Okay. In futures, at least. Okay. If it's your first year, you're almost certainly going to lose money in that first year, right? And what I see a lot of beginners do is they come in and they start swinging ES. It used to be, before micro futures came along, they would start swinging ES and blow $10,000 on it before, a couple months went by and they give up, right? So, and we're talking about something where you might need to do this for 5 years or more to even get good at it, let alone become profitable from it, right? So your burn rate really matters, right? How long you can keep going and, frankly, keep losing and still be able to trade and gain that experience matters a lot. And the micro treasuries is where your burn rate is going to be the lowest. It's going to keep you trading for the longest. So it really kind of gets you in all of the spots. It's like, okay, lowest risk per trade / burn rate, right? Greatest ability for you to be able to find an edge, right? Less noise. I think there's a lot of great things about the treasury markets, and that they're more suitable for trading for retail traders than many other instruments, right? You're going to trade one of the other instruments. So like Kevin is trading oil, right? But you've got like a really good trade for going into the close, and you understand a lot of things about the oil market that I think I don't, right? If you're going to trade one of those commodity markets, you've got to be able to have an insight into that market. Yeah, but micros, MES, and MCL. Yeah. I guess the thing that I'm kind of struggling with right here, oil, since the Ukrainian war is too risky for you. Well, you used to trade treasuries, right? You can do the micro treasury futures, and you can trade it with the multiple contracts too. Although with the size of your account and the risk that you're taking on, maybe you're just better doing the regular ZN. Ew, my voice. I had to mute it for the commercial. Oh, you know what? I shouldn't mute it that way. I should mute it this way. There we go. Well, when the move was happening, I was feeling like, maybe they're buying because of the end of month rebalancing. Maybe they're not reading the news the same way that I am, etc., etc. And I was really getting deep into it, and maybe I was in my head a little bit too. Well, now looking at it, this looks like there was a news. Our interpretation of the news was correct, and the market made an impulsive move, but then they got sucked back up into the liquidity hole, and the traders are saying that they're not interested in trading it. So I guess you could say that news was not impactful enough to make them want to make a huge move on Friday at the end of the month. So I don't know if there's really like there's going to be some bid for the end of month or any of that. But we could justify a buy. We could justify a buy today based on it just being the end of the month in the treasuries, because the end of the month does tend to be up. I'm not sure that the risk parity flows, like I was saying earlier, I don't know if the risk parity flows would be up or down, but the treasury flows in general tend to be up at the end of the month. So you could potentially try and trade off of that flow. I'm curious to see how the E-mini shakes out today. And we do have in 45 minutes another pretty key data point, right? That would be interesting if we saw the inflation numbers continue to be high and Chicago PMI was poor, right? Now that I say that, they're making a move. No? They're moving. They're definitely moving around. The treasuries are, but it's not in a way that we can really make any conclusions off of it. But one thing that I am seeing, that I'm a little suspicious about, is that the 6J did move down since the move, and it appears perhaps poised to move lower. So the 6J and the treasuries don't seem to be acting in line with each other. I guess we also have to consider what the weekend flows might be. I was thinking about something else. Oh. I went on that whole rant about value, right? I think that if our goal, right, is to create more economic opportunity, and we're doing that by, making the markets more efficient, I just feel that lately, you know why I'm on this trip is because my stepson is 14 and is doing 14-year-old stuff. You know what I mean? And I'm realizing now that I did not do a very good job at instilling purpose and value in my stepkids. Is what I think. It's kind of hard to see. The relationship that you have with your stepkids is just different, I have to say. The relationship that you build with a kid when they're like 1 to 3 is very different from, and maybe even up to 5 is different than what you get after that. Especially when they're, spending half of their time at somebody else's house, right? So I'm not quite sure what I would have done differently, right? But I can see kind of the problem that they're running into, possibly, and that I need to make sure that I don't fail with that with the other kids. But then at which point your question is, what actually is your purpose and your values, right? So I've been doing a great study on this. I've been going through all of these different like websites and brands and stuff that I like. And I'm saying, okay, so what actually is their purpose and their values? Some of the most successful companies that you're going to see out there, they very clearly have those, right? I didn't really realize it so much, but like the bank that I worked at, they have a very, very strong opinion about what their purpose is and the values that they need to achieve that, right? A big one is integrity, which I know is laughable. Well, not laughable, but it's kind of ironic given that all of the banks, but Goldman in particular, has been hit many times for actions of some of their employees that were dishonest. I guess you can push the values all you want, but some people are still just going to go and do their own thing, right? But I think that the logic behind like why those are important and everything is really solid, right? How can you actually be that person that is loaning money out to people and is helping you develop and give loans for companies to create more economic opportunity in the world? How can you be that if people don't trust you? That's why this ongoing thing with Goldman is such a big deal, right? Because it's really it hits at like their core business to some extent, right? Oh wow, I didn't even notice. Thank you for pointing that out. Crude is definitely taking off here, man, and they did just pierce $100 a barrel. We are seeing a little bit of, actually not a little bit, quite a bit more selling. Oh, dang it. That didn't work out the way that I thought it would. I might just scratch that and bail. So there's an iceberg at 22, and it could be oil moving up could cause the treasuries to move down a little bit again, right? Although I have to wonder, there's not any news or anything with oil, right? Let's see, our Nick Timmerose core PCE at June rose 0.59% from May, in line with private forecasters and likely the Fed had anticipated. Core inflation rose 4.8% over the last year and 5.2% over the last 3 months on an annualized basis. Okay. There's going to be more iceberging there at 22. Let's like reset things here. No, there was no more iceberg, and they ticked down. So it's maybe just a little bit early, but this is around the time that if there was going to be more meta order, we could expect to see it. Yeah, Lafta, that I don't know what to think of that story. So he's bringing up that Nancy Pelosi is doing a tour of Asia with a delegation, and they want to stop in Taiwan, and China has been saying that she shouldn't do that. And like, we don't really know any real details, but Nancy Pelosi said something about that China would attack her plane or kill her or something like that. And I don't know if that's just rumor, if she was just repeating rumor, or what, if there's actually is a credible threat. I don't know. And I don't know if she's actually going to go through with it or not. So I guess we kind of just have to see. It is important to know that Biden and Xi spoke yesterday. And, you know, Biden said we're not changing our one China policy, but he did warn China too. So I hope that cooler heads will prevail. Yeah. I'm listening for the end of these commercials to make sure that I turn it back on for you. Good morning, Dee. How are you? You know, I haven't been hearing as much from you lately, Dee, but you're still around, and it sounds like you're still working hard and dedicated, and I think you deserve some kudos for that. I think there's been a number of you guys. I'm trying to remember what was the name of the other person that I saw that was working hard, but the most recent slate of traders that we've gotten in seem to be a harder working than some in the past. Hey Steven, how are you? I haven't seen you in a few days. Good morning. So now the treasuries are kind of doing this thing like we're opposed to strike for the lows, but will we or won't we? Been working on the options lots. Oh yeah, okay. I tell you what, that's, you know, one of the things about the equity markets. So this is a more interesting discussion about like how to trade and stuff like that. So if you come in and you say, I want to day trade futures, right? Then it's I'd say that it's really more about which market you want to build your edge in. I mean, you can do market making kind of strategies, but I just, at least with the big futures at the CME, I don't think that retail traders are very competitive with that, right? So I think you're a lot better off being a speculative trader. And, you know, so there's the options for that, okay? But you could not do futures, right? You could do stocks, you could do options, right? And I think that the big dichotomy between futures versus stocks and options is that with stocks and options, you're doing research on hundreds of different instruments and trying to find things. And that's hard. I'm so ADHD, I think I would have a hard time with that because I would just always be getting distracted with shiny new instruments, right? Whereas with this one, it's just, okay, let's learn how the treasuries work and try and find an aberration and wait around for them to happen. In options, you're constantly searching and you got to find it fast and take advantage of it. And it's a completely different game in many respects, right? It's a completely different game in many respects. Iceberg at 20.5, and they were able to sell into the 20,000 contracts too. That's pretty strong resistance there. But it did come back up pretty good. And I can see that the 6J continues to be tilted to the downside. The volume in the 10-year, actually across the board, all three of them, the volume for the last 30 to 45 minutes since the news has all been to the downside. So it is still, I think, quite unusual that they've been able to hold the bid the way that they have. Now corn is going. I need to get, I should put my little indicators on there for like notifying me. I had an indicator that would kind of make a sound when something was making somewhat of a breakout outside of its normal volatility, essentially. Let's see here. Corn, wow, yeah, corn is up 2%. And copper is up. Well, what's down? Pretty much almost everything else is down. Silver and gold are down. No, soybeans are up. I should sort this differently. Yeah, oil, corn, soybeans, copper. Like the commodities are all up. I don't know. It's okay. How are you able to see icebergs? So when I'm watching the DOM, so this is Jigsaw Day Trader, is all of these DOMs. The charts are Ninja Trader, but I execute in Jigsaw. And the way that I identify an iceberg, ooh, well, that was interesting. Not sure what to make of that one. Maybe there's just a really bad liquidity hole at 21. Anyways, what you're going to see is you can see a bunch of volume go into it. So like the offer might be only 400, but then you see volume go into 20 half and you see like 1,000, 2,000 contracts go through and it still doesn't tick down, right? Like that's an iceberg. If it's an exchange side iceberg, then what will happen is as the volume hits into it, you won't see the bid change at all, right? But a lot of the icebergs that you see these days are synthetic ones. So that's generally speaking, you know, if I'm seeing 700 is your average bid offer and I see 1,000 or more trade into it before it has to trade down, then that means that there was an iceberg there. And that's how I'm reading them. You got to be careful about icebergs though. Like I don't, I think that a lot of people want to use icebergs as some sort of technical analysis signal. And I don't find that to be very, very reliable. But icebergs can be one of the ways that liquidity holes form. Icebergs can give you a really good idea about how strong or weak one side is. So you can see the way that this tape has been going so far today. You know, there was some pretty strong resistance up in here. And they pushed down, but then you can see that they pushed back up on like almost no volume. So I'm not 100% sure what is driving the treasuries here still. All of the things that I know that should be driving the orders kind of say that we should be selling. Kind of all of the flows that I see, except for maybe the end of month, say that we should be selling. The end of month should say that we should be buying, but I'm not seeing buying. What I'm seeing is I am seeing the selling, and it's just not really hurting price too much. So I'm not sure what to make of that yet. We did get the meta order that we were expecting around the time that we were expecting. It's just, and maybe it will yet come through. Especially as the S&P 500 trades. I don't know. They're not... The pre-session here in equities does not look too high at the moment, does it? Does gold have some sort of type of spread as well, Seth? Well, I mean, if you wanted to do a spread, you could do the spread between gold and silver, right? There's actually a really interesting potential trade in that with gold and silver right now, because gold is significantly higher relative to silver than usual. Although I don't know about after yesterday. That's probably come in a bit, but earlier in the week, Zero Hedge in particular was pointing out as a potential trade in silver that silver was quite depressed compared to gold. So you can do that sort of a spread trade. Although I don't know how you sort the different ratios out between them. You might need a big wad of cash to do a spread on that one. And another thing is with any future, there's going to be some sort of a basis trade. And actually, it's kind of funny. Micro treasury futures is like the one place that you can't really do a basis trade. Because I don't know of any way to get direct exposure to yields through cash. Otherwise, I would be basis trading. I think if I could come in and say $50, what is it? Is it $50 per contract for treasury yield futures? I forget. Let's just say it is $50 per contract micro treasury yield futures. And then I was able to get $50 of exposure in actual yields and then do the basis trade. Yeah. And the basis trade right now, from what I can see, if you go into August, you got like a good $40, $50 worth of basis difference between that and the cash. And you just go long one and short the other one and pocket the difference. There's always, but anyways, the point is there's always a basis trade available, right? All futures trade with a basis that decreases going into the expiration, that converges on the cash price on expiration. It doesn't have to converge upon that price, but that's the overwhelming tendency. Whoa. Okay, see, that move does not make sense. But something hit there really hard. That might have been a stop run. I think that there's maybe a little bit of painting the tape going on. It seems like there's somebody wants it to go higher. But look, the volume on this, again, very light. But it was all buying. But they were extremely aggressive, and the offers just kind of pulled out of the way. So what's with that? And this is particularly odd after the sellers had made a couple of significant wins there. But I think I have to bail. I think that's it for me today. I think I tried it twice and it didn't work out. So I think that we're just going to have to be okay with, I don't know. I say I don't know too much. I thought like I had gotten myself out of that habit. This is a really strong trend emergence here all of a sudden in the treasury. And I cannot, for the life of me, figure out where it's coming from.
More advanced and more capable. That's how the new 2022 Chevy Silverado rolls.
I think with a move like that, there has to be some of this has to be coming in the cash market because the futures really aren't trading that much. Man, that robot was like posted a ton there before we banned it, didn't they?
Click now to learn more.
It's that time of the year for the excitement of fall sports.
Well, what was the max that I got off of that?
Everything you need to gear up for success this season.
Well.
Shop the latest in sportswear from the top brands like Nike,
Okay.
Adidas, Under Armour, Asics.
Man, I never got favorable excursion on the other one. That sucks.
On the field.
That sucks.
It's time to compete every day, every game, all season long. Shields, gear to get you ready.
I mean, it could turn down again, but it's definitely fighting me, right? This is definitely fighting me. I find that really frustrating. What was the price that I took, by the way? 12. Yeah, okay. It looks to me like that aggressive movement and combined with just kind of 23 being where the volume had been before, maybe creating another little, balanced area, but the S&P 500 has not started yet, so. Well, here before the session starts is a good time to point out that if you're new here, of course, like and subscribe, but then also you should check out the links that we have in the video description, because again, we're talking about value. I have a couple of things in the video description that I think could be valuable to you, right? I have an indicator suite for NinjaTrader. That's how I'm able to see these things like the spread and what the dollar index is doing and so forth. I think those are like really essential tools. I really don't understand how people are trading without those tools. The dollar index in particular, it's like everything that we do is priced in dollars. You think that the value of the dollar matters? Maybe, yeah, it does. So there's that, and it's $100 for a lifetime license. Also, there's another thing that I think is essential is a news squawk, and I use Financial Juice. They're about $100 a month right now. But they're really good and it's totally worth it. I really don't see how people trade without without a news squawk. So we have an affiliate link. If you purchase a Financial Juice subscription, it helps the channel out. And we use the money that we get from that, we put it back into the channel. The channel's been doing pretty good in that respect. And I feel like we're just on the edge maybe of really being able to put more resources into the channel to get like help from other people. So I'm really excited about that. Which you say that my indicator, which one? The spread indicator? You gotta debug that for me if it was the spread one, because that one's never broken. Oh, your dollar did? Last night. That's a little weird. Did the Ninja Trader output window give you anything? Yeah, there might be a strange edge case that I don't have covered. That maybe maybe nobody's run into because we've never like run it at those times. I'm working on the spread indicator. Hopefully I get some more time to do that over the weekend. I had the day before yesterday, I made a bunch of changes to it that I was really happy with. I thought were really cool. So kind of combining everything, right. I don't know if I'm going to keep it. I have one indicator that's like line on close and one that's the candles, but I think that I might just combine them, make it a setting. Just ran it again. It's blank. I'm gonna be doing something wrong. Maybe it's because rollovers and you've got the rollovers wrong. So like I think with the way that you had it set up, you had to specify the month, right? So maybe it's that you need to change it from from July to August. Go into the settings and change that. That's probably what it is. I might have a better solution for that too. I need to look into it. I don't know if Ninja Trader provides me enough of information to roll it over myself or not. They're still pushing. Well, I don't know. Where did it get that 235 from? My chart, I think, is screwed up here. Yeah, it's... There we go. Ninja Traders having a hiccup. Yeah, see, that would do it. You need to be on 0922. I do. This indicates, so like... Oh, I don't actually... Okay, I need to change that. It's really just better to put it on the 6E, to be honest with you. So you're trying to put it on a completely different chart that has different rollovers. That's why you have that problem, right? Because the FX futures roll over on a monthly basis and gold rolls over on a quarterly basis. That's why. And it's trying to use gold to determine which month to open up. I think that I might be able to use Ninja Trader to look up what the front month is, but we'll see. Yeah, if you put it on 6E, then you for sure won't have any problems. Well, because the regular DX futures are on the ICE exchange and requires $100 a month of data that anybody trading on the CME probably isn't going to want to pay. That's why. The whole point is that we don't get the data for the dollar index. None of the retail traders do, and so we calculate it ourselves. Hey, come on, it's a clever solution. You got to admit, when you hear that, you got to admit why is Seth the only one smart enough to do that? It really makes you wonder what some of these other people are doing. Nah, I tell you what it is that everybody else is too distracted with stupid TA indicators. Listen, for professionals, one of the biggest tools for professionals is correlations, correlated assets, right? Correlated assets and calculating what a fair price is based on those. Okay, who would mention? Okay, I'm gonna have to look that up. Wait. I'm pretty sure that most of the people at my day job don't really start work until 9 o'clock. Like 8 is early. I think that a lot of them get in at 9 o'clock, and somebody just sent a message to like everybody at 7:30. Those TA indicators is what helps you take their... No. You missed the earlier conversation, D. Let me do the earlier conversation, right? Okay. I've been on a little bit of a philosophical journey lately to more explicitly define purpose and values, right? And to me, purpose is to create more economic growth and opportunities, particularly for me and my children. So I believe that I have enjoyed a special position. We know things that other people don't, and I think that puts me in a special position to be able to help my kids become valuable members of society because they understand these things. And then, they can teach that to their kids, and they can all create more value in the world, and that's going to help everybody, right? That's the ultimate thing, right? Look, you aren't going to be here forever. You're not. If you want to have a lasting impact on the world, you've got to do it through the people that come after you, not just what you're doing here right now, right? That's purpose. And the way that we're doing that is we're helping create markets more efficient, right? I'm doing things that are making the retail traders more effective. Kind of, on one hand, it kind of makes you guys more competitive, and I'm competing with you guys. But at the moment, I'm not so concerned about that because I'm pretty confident in my ability to execute better than the average retail trader. And I'm giving you guys like basic things, like I'm giving you guys things that like really just give you a chance. I don't understand what people think they're doing when they can't even see the value of the money, the currency that they're trading based on, let alone, knowing anything about what the future orders might entail. Right. So I'm kind of just giving you some tools that help you even stand a chance. I shouldn't have presented that way. Like the thing is, I've been doing stuff to try and help like market the indicators better. And everything is basically like, tell them that if you use this indicator that you're going to become rich and famous and all these sorts of things. It's like, well, that's not the way that the market works though, right? But what I'm never going to come in and give you like some promise based on the performance that you're going to get, right? But what I can promise is that you're going to have a much better idea of what's going on, right? You might not be making money, but you might at least understand why you're not making money, right? Like that's my goal. That's what I'm trying to do to help you guys, right? Those indicators, they provide value. And if I'm going to make money, I want it to be because I'm providing value to the world. Preferably, I'm providing more value than I'm getting back. I mean, obviously, I want to make lots of money, but the more value that I'm giving the world, the more that I am accomplishing my goal and benefiting society, right? Don't be a leech. Okay, everybody, after this COVID thing, everybody wants to be a leech. Everybody's rent seekers. How can I best convince idiots on the internet to give me money for something that's probably not actually worth anything? That's not me. I don't want to get this hustlers university thing that's going. No, thank you. No, thank you. I want to provide value to society and particularly to the trading community and to my kids. Right? That's the goal. That's the purpose. Listen, if you don't have purpose, you're not going to make it very far in trading. Really, because when it gets hard, right? When the futures are hitting limit down every day and your broker has doubled the margin requirements and everything for you, right? What's going to keep you trading? Because I tell you what, there was a lot of people. There was a lot of people that I saw around in the trading world and disappeared at the COVID crash. And it was like a completely different set of people that came in and started day trading afterwards. And I really feel like that most of those people were being kind of manipulated by social media advertisements. It was like all of a sudden the algorithms turned on and said, okay, it's okay for the public to buy things, right? And then all those people got screwed over anyways. But it got hard. What's going to keep you going when it's hard? If you don't have purpose, or your purpose was just like to make money, that's not going to keep you. You need something that's greater than yourself. It used to be that the purpose that people had that was greater than themselves was all based in religion. And I think that is good and admirable thing, but it seems clear to me that in our modern society, that's not enough. That if you do have a good, strong religion, like good, but that probably you need a little bit more to kind of find your place in life. And that there's a lot of people that just don't have their religion anyways, and they need to find their purpose in life, right? You got to have that purpose, man. Look at that. What price was that at? There it is. 28.5. So when we look at this, we did get a little bit of an impulse down around the time that I was expecting. It was very short-lived, and they squeezed back to the 23. Those bids were quite aggressive as they did so. And now here, 20 minutes later after that, we get a significant squeeze higher here. But we're also getting quite a good run in the S&P 500. I'm not hearing anything coming out over the news squawk or anything, It looks like there's just like probably there was somebody got squeezed out there, maybe. Something like that kind of seems like that would be a good reason to buy, but look at what the micros are doing now. Look at what the micros are doing now. Oh, you know what that was? No, I'm so stupid, guys. No, that was the Chicago PMI. The Chicago PMI must have been really bad. you know what? I must not be on my game today because I should have realized that one immediately. Bring back legions of man chanting Deus Vult and marching normed to teeth. I think one of the unfortunate things about this world is that so many people have decided that their purpose in life is to subjugate the rest of the world. Okay. So the Chicago PMI was 52.1 versus an expected 55. So a move up would be justified off of the Chicago PMI, but it could be just as short-lived as the downside movement that we had. The S&P 500 is rallying off of the bad news is good narrative again. I guess I'm probably not going to take another trade today. Let's see here. What did I do? Yeah, okay. Yeah, that's okay. We got some good stuff for next week, so I'm a little bummed at the moment, but we could take another trade, but I'm kind of leaning towards not. Let's stick around, maybe we'll do it. Oh, you know, I turned the sound off. I didn't bring it back. Did the 6J pop there? Just a little bit. Just a little bit. But look, you see it's coming back really hard. That was definitely the Chicago PMI. So my base case would be that they settle down again. That might be in a different spot. I mean, it's possible that they come back to the 24 or something. But yeah, that was a good push up. That market has a long memory. I don't necessarily see somebody pushing back the other way to make it push back. So it might find balance somewhere else. You like the music? Good. You know, we did it the other day and we were doing like, what was it? Ambient dubstep or whatever it's called. Chill step. Is that what it was called? Chill step. But I really like the drum and bass one. Drum and bass is dope. The house one is just too, I mean, it's house, but it's too cheesy. I want something a little more serious. You know what I mean? So I think this one is good. I don't know if we're going to do it all the time. We could do another poll about it, but I'm actually more... Those are some other things that I was going to do some polls about, but I don't remember anymore. I've been messing around with the Edge Clear platform a lot, and I was kind of wondering about what platforms people were using and stuff. So I think that a lot of you guys are using Sierra charts. I did not know this, but you can use Sierra charts on Edge Clear, apparently. So... So I think that the Edge Clear guys have been really helpful, and my experience with them so far has been really good, and so I kind of want to help them. And I feel like that more traders over here would be a good thing for the community. But How you actually help them out, I'm not 100% sure, because they have their platform. It's based on MotiveWave. And I'd say it's a good platform. It's Java, which I really don't like Java, but I mean, that's fine. You can write stuff for it and everything. I'm kind of thinking though that a different charting platform isn't enough, you know? I'm not sure that a different charting platform is enough to drag people over, because I actually have it. I actually fixed a couple of things. Hold on a second. I'll show you here in a second. I think it was this one. Yeah. So I thought that you couldn't connect it through Rhythmic Trader Pro plugin mode, but apparently you can. So that's what you get. I hate that it uses the regular Windows window up at the top there, and you get this weird color. Oh yeah, that's right. I use the yeah, let's change this. Let's change this over here to something a little bit more interesting for you guys. I'll give it a second. The auto fill doesn't seem to work for some reason.
Visit Shane Company for your wedding bands. Not only do we have the widest
Get consumer sentiment at the top of the hour.
also experts at helping
There you go.
find the perfect band to complement your engagement ring, even if it's an heirloom.
So you get that thing, right?
Some
But
bands in every price range. Our bands are made to the highest standards, so we can offer a free lifetime warranty. Come see us and we'll help you both find a band that you love wearing every day.
Now you have a friend in the jewelry business. Shane Company and Shane.
let's not do 15 minutes. Let's do 5 minutes.
Advanced and more capable. That's how the new 2022 Chevy
Hey, you have to turn all of these stupid
delivering more towing capacity,
display things off.
and new tech advancements
Toolbar,
in control and fully connected.
left status bar, don't need that. Status bar, don't need that.
Screen and improved
Why would I need the status bar on every single freaking thing? Okay, now you got the menu bar. Okay, so I'll move this over to here for a second. And then I'm going to pop up my Ninja Trader chart.
You need milk for Zoe and a cold brew
Wow.
for yourself. Smith's Delivery will
Okay.
get you just what you need. in
So, oh, and you know what else I need to change is,
Smith's, fresh for everyone. Delivery time's not guaranteed. Restrictions may apply. See site for details.
here we go.
When you're a Boost member, you get free
Okay, so except for the font, because I haven't made the font huge over here, right? Pretty similar, right? Got them pretty similar. Is one better than the other? You know what I mean? Like I can make my charts look the same. So what's the benefit of using this one versus this one? Does it matter? Or, I don't know. That's kind of what I'm struggling with right now. Is like, okay, so if we want to say, yeah, you should totally come over to EdgeClear. Other than the fact that we like them and maybe you get better service. You know, what other kind of tangibles can you give people that would make them want to move over? I don't know. The platform's okay. Platform's okay. Try the Eurodollar. Oh, that's a good question. What is the SOFR futures symbol? SR3, right? Well, it doesn't show up there. No. Doesn't show up on the list. Oceanic, how you doing? I don't think it shows up. Yeah, it just doesn't show up. It is CBOT, right? I read an interesting thing yesterday in a study. I'm curious what you get out of it. Sure, that sounds interesting. One of them doesn't provide statements that you can print. I don't know who that is. I'm pretty sure that's not Phillips. Consider the diversity prediction theorem, which says that given a crowd of predictive models, the collective error equals the average individual error minus the prediction diversity. You can think of collective error as the wisdom of the crowd, average individual error as smarts, and prediction diversity as the difference among the predictive models. Sure. Are they saying that they can actually calculate this? I'm gonna bet that if you actually calculate it, that that real life practicality doesn't quite match what their metric would be, though. You know what I mean? I guess, rather than the real life market applicability, as you just put it. I don't know why they would say something like that in a study unless their intention was to calculate it, right? Because they're putting a theory forth, right? The next key point would be to actually run such an experiment and see if the amount of error that they get out of the combination of models is what they predict based on their model of predicting a combination of models, right? Okay, here we go. Okay, so sentiment was 51.5 versus 51.1. So mostly in line with expectations. 1 year inflation final 5.2, which was what the expected number was, and 5 year 2.9 versus 2.8. So I mean, we did move down a little bit on that news, but I don't know if that's enough for me to take a trade off of it. That's actually quite in line with the news or with the expectations. Market is looking relatively quiet off of it and stuff. Who's on is on the others? Oh, well, that's not a study, dude. I have that one. So let's pull that up. You should have just said that at the beginning. Where is it? There it is. Who is on the Other Side by Blue Mountain Investment Research. It's in my little trove of documents that I keep on my machine. This is one of the best documents that you can possibly read if you're starting out, right? This is one of the best documents that you can read when you're starting out. Okay. We now turn to the issue of when and how the wisdom of crowds where markets are efficient transitions to the madness of crowds where markets are inefficient. This may be the most important recurring behavioral opportunity. For a crowd to be wise, the members need to have heterogeneous views. To be more formal, consider the diversity prediction theorem, which says that given a crowd of predictive models, the predictive error equals the average individual error minus the prediction diversity. So they're citing another study. They're citing a study there. You can think of a collective error as the wisdom of the crowd and average individual error as smarts, and prediction diversity as the difference among the predictive models. In markets, price veers from value when investors come to believe the same thing or act as they do. In other words, when investors lose diversity, markets lose efficiency. Right. But they get down to a point here, I think. So yeah, I understand what they're saying. I mean, okay, so now I can take a little bit more. I can hedge a little bit less here, right? Because what they're basically saying is that theoretically, market should be very, very efficient, but in practice, it actually is not. In reality, it is actually not. So love the music. Good. I'm glad you do. I'm still a little torn on whether, but I kind of like the music too, so maybe we'll just keep it on drum and bass every day. No, the reason that this is so good, so when you come down in here, let me make this bigger so we can just see more. Time arbitrage, blah, 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 blah. So basically what they're saying is these are the different ways to make money in the markets, right? And their first one, there's basically, I think there was 3, right? Behavioral inefficiencies, analytical inefficiencies, and informational inefficiencies, right? Analytical. The last one is informational, right? Yep, informational. Oh, technical inefficiencies. Technical inefficiency arises when some market participants have to buy or sell securities for reasons that are unrelated to fundamental value. Okay, so this is like one of the ones that we focus on a lot, right?
The Sport Clip's MVP haircut.
I have to turn off the commercials. Maybe I need to buy a Spotify subscription. Anyways, and then they kind of further break it down, right? So this is a really good primer for people that are new in the market, particularly about, okay, what are the different ways that I can actually make money, right? And it's very thorough and well thought out. It is one of the best things that you can read, and it's a free document you can just go out there and find. Yeah. But I think that the point they were trying to make there, Oceanic, is that theoretically having a bunch of different people all trade in on the market saying what they think the price should be should lead to a very efficient market. But it appears that the reality is very different. And that's what they were getting at. They were essentially trying to prove to you that such behavioral inefficiencies do in fact exist. That there are some situations where everybody seems to be looking at the same thing, and then that same thing ends up not being predictive of what's going to happen, and so they all lose big time. And is it wrong? I'm not sure what part you meant by what is wrong. The market is not efficient. It's not efficient by a long shot. Those who make money every day, nearly on every trade, are not being. Well, I don't think that it works like that. So what do we think treasuries do next? Do they sell off or do they just settle here? Or do we have another leg higher? Thank you, Oceanic. Yeah, I don't know. Maybe I should make a video about that document because it is a really useful one. But I think it's fairly widely known. I bet you that somebody on YouTube has already done so. Man, if we had just taken the opposite of our trade, we'd be doing really, really well right now. We'd be up 40, 50 bucks. I'm really quite surprised that those personal income numbers and everything didn't have a stronger effect. But it seems to me that in the bear market, the market bears, we want to call them that. Oh man, 121.08. Okay. The market bears have complete control right now. People that think that the Federal Reserve is going to back off raising interest rates immediately. Honestly, I think I've heard it. Yeah, we've talked about it before for sure. Yeah. I think when you're just starting out, that's one of the best things to know. Like my favorite book, Trades, Quotes, and Prices, Markets Under the Microscope by Jean-Philippe Bouchot, is a great book, but it wouldn't be the first book that I read. It's an advanced book, and you probably want to understand a little bit about order flow and the DOM, because learning all of that stuff from the book is really hard because they're doing it all with math, right? And you need to have enough context to be able to understand what they're talking about with the math and why they would represent it like that. ZB stuck in the mud. Yeah, they kind of all are. But like, look at the so like the volume in the 10-year, I think, shows his story really well. Hold on, I need to zoom in here correctly. This is not drum and bass. Coffee date. Oh, you know what? I might not be. It might not be playing the list that it's supposed to. I hope this stream might get hit. That's okay. Yeah. Financial Markets Under the Microscope. Yeah. Okay, anyways, the chart. Yes. So we had a impulse. This was where I went, I tried going on this one. I thought that we should continue down a little bit more. It did not. They returned back to balance. There was then 45 minutes later another attempt, but they were not able to break a new low and they gave up on that. Okay, so then we returned back to balance. We then had the Chicago PMI, which led to a very impulsive move higher. And you can see that right there. This is like the all of the buying was right in here. And here, because when it fell down, they bought it back up really quickly for whatever that was about. Oh no, wait, that was the other news. That was consumer sentiment. Consumer sentiment was better than expected, right? Yeah, consumer sentiment was a little bit better than expected, but like the market bought that one back too. And now that's just kind of like in balance. So now we've I think that you kind of have an issue here if you want to take a trade, because we had news both ways and all of that news kind of like fizzled out and the market just kind of found a spot, and now a decent amount of volume has gone through and appears to be ready to go through at 28. So now you're going to have a liquidity hole. So what is going to dig you out of that hole if you want to take another trade for Friday, right? I think that, and unless you had gotten along somewhere back in here, because we could have another leg higher, and right, it's just, it might not be for a while, right? It might not be for another 30 minutes. But because of that setup, I see significantly less opportunity in the market going forward. By the way, with the music, how is the sound is good? Or like the level is good too, right? You can hear. So the other day somebody said, "Oh, I'm not sure I can hear very well." I think it's, I don't know. Like at first I was like, man, I really need to stop saying I don't know, because I do know. It just means that maybe I have a little bit of mixed feelings on it at the moment, right? When we did the poll and everything, it was kind of like, I don't know if people really like the music and everything. But, the whole idea was it should help with retention and bringing, new people staying in the stream and listening. And I think that we're doing that today. So we do have more viewers today than we had earlier in the week. I don't know if that's significant or not, but I guess though it's a more interesting day today, isn't it? We did take a trade. I wish I could have come out with that one and really knocked it out of the park. That would have been great, but it's not. It's always the hard road for me. What do you guys think? Do you think that first trade that I took was ill-advised? Because I came in here, I tried selling it somewhere in here and had to puke somewhere over in here. Was basically the trade that I took. That was a pretty ugly trade. This one right here, I don't know if there's any way that I would have tried taking that one, but that was probably the trade to take, right? Yes, now it emphasizes your discourse rather than overwhelm it. Good. Yeah, and it is, you know, I think the style of it is, I think, good for what we're doing, right? Because the house was a little bit, it wasn't serious enough, right? This is more serious, but it's still upbeat. So keeping us engaged and stuff. Gonna make a noise complaint. Dude, well, I mean, my neighbors are all very nice, right? But when I work out, I know that I'm creating a ruckus for everybody else. This is trade music. I don't play it super loud, but if you're outside, you can hear it. And if you're in your house, you might feel when I drop the weights. But they're cool. My neighbors are cool, so it's not a problem. Maybe if I was doing it late at night, maybe then it would be a problem, right? I knew there was one, man. So where my gym is, I mean, I don't really go to my gym much anymore because I got these babies. But I would like my babies to be old enough that I could take them with me, especially on Saturday. I could take them with me and that they could learn from being with the team. I think that would be a good thing because my people, my tribe has been the weightlifting team. I think there's something to that, you know, like I feel like a lot of people these days kind of have this idea in their head that, like, I have to find people like me. You want to find people like me, and nobody is like me, and I'm all alone. And that's kind of the approach that people have. And I think that they have that approach because, you know, like, that's the way it is online, is that people get together based on a common interest. Like, here we have a community here. It's a community of people that are interested in futures trading and especially in interest rates, right? But that's not the way that communities have been built in the past, and in my opinion, it may actually make there's some severe downsides to having your community based purely on one interest, right? A community was typically just the people that are around you, right? And you just learned to deal with it. Who was there, right? You just learned to deal with who was in your environment and to get along with and be successful with them, right? And now people don't want to put that effort in. They go, oh, these people aren't like me, so they don't interact with their community, and we become more and more isolated because of that. And in my weightlifting thing, you know, there's many communities that are like this, but of course they all have the interest in weightlifting. But you get a really diverse group of people, right? And you're just there together to work hard, right? So I want my kids to experience that. Down the street house just sold to an elderly couple. I think they're happy. Next day, the neighbor's a pro bodybuilder and blasts music when lifting. Yeah. I mean, I have a pretty decent speaker so that I can feel the bass when I'm working out, but I don't think that anybody would really notice unless they were outside. Because I can barely hear it when I'm inside my house. So the weight's dropping though, because I dropped the weights, right? With the weight's dropping, that's definitely disruptive. So I was gonna say where my at my gym, it's in our coach's basement essentially. Like she's got a nice Rambler that's got a really wide floor plan. And then the whole basement is the weightlifting gym, right? And this lady that moved next door to them was so overly sensitive about it. Just really thought it was so disruptive and way too loud and everything. I'm like, this doesn't make any sense. Like, we would go outside, it would say, okay, you work out, you drop the weights and everything. We'll see how loud it is out here. And like, he could barely hear it. But she was like ultra sensitive to it and like was complaining about it so much and did everything she could to try and make their life, to get rid of the gym or whatever. But the law was always on the gym side, and I think she eventually sold it, and the new neighbors don't care. It was just like kind of a funny drama that went down with that though. So anyways, I felt like I had some more. Come over here. So I got to tell you, man, there's been a lot of activity with the channel lately. The actual like viewership is down a little bit because I didn't put out as many videos in June. I'm not gonna put out a video on Monday. Well, actually, I might put out a video on Monday, but I haven't written one yet. Might do a video about the setup because that one would be pretty easy to do, right? Do they have rubber coat? Yeah, they have to be rubber coated plates. Yep. But the when you drop the weights on the floor, it kind of creates a vibration that goes through the ground, and that you can feel very, very little bit, but like if you were at the next house over. So I'm saying she's overly, that person was overly sensitive. Anyways, I might do a video about our setup because people were asking about the setup, and I don't really have a video about it, and I probably should. And that would help people see why we just set it up this way. Anyways, but I've been getting lots of messages and stuff from people. It's like, man, I could hire somebody and they could have a full-time job just following up with and chasing leads on different projects that we've got going on. It's kind of crazy. I don't know if anything really comes from any of it, but like, it's a lot. Oh my gosh, it's a lot. I've been working, like I said before, I feel like we can get a lot more value out of the channel, and I can bring a lot more value to you through the channel, and I need to do better at it. It's hard, and I'm not saying that I'm like being a slacker or anything, but there is more that I can get out, right? I think that in some respects there were some periods, I had a child at the wrong time, man. Because if in 2020 I had been able to really focus on the stream and making a lot of content and really go time, then when things really came to a head in 2021, we could have taken advantage of it better, but well, never the wrong time. Yeah, it's just I feel bad when I kind of look that was like I feel like I'm falling behind a little bit, you know what I mean? Like, YouTube is a competitive space, and I think that the other creators caught up with and left us because I wasn't putting as much content out. How much vibration does? Well, I don't list. When I do a deadlift, it's well. First of all, I don't do like deadlifts. Okay. Doing deadlifts is like kind of a slightly different movement from what you do in weightlifting, and so it kind of teaches you the wrong movement. So we do different sorts of things. But I'll do Romanian deadlifts, for instance. When I'm doing Romanian deadlifts, I'm doing a minimum of 120 kilos, which is about 240. So listen, I am a thin guy. I don't know what, maybe it was because I was, take ADHD meds when I was a kid and it stunted my growth a little bit. My brother, my little brother, is slightly taller than me. He does have more upper body mass, but man, we're just built thin, right? And if you saw me in person, you would probably be really surprised. You would be like, oh my gosh, like I can put my pinky finger around your wrist, that sort of a thing, right? Okay. But I worked hard on the weightlifting. Most people, almost any other person on this planet, almost not every, but just about any other male on this planet, if they put in the amount of effort that I did in weightlifting, they'd probably be stronger than me. But most people don't. And I did take it seriously. So I can lift a real weight. 120 is light. Okay. But don't insult me by saying that it's like you can't, that's like my wife can lift that much. And that's like a beginner. That's like even less than beginner weights, 75 pounds deadlift. 4136 is the 5th largest gamma level. I don't know if at this point in the cycle, Marco Polo, if the gamma levels are that important. Certainly, I think 4136, if there is a lot of gamma there, it could have an impact. I don't know, though. We'd have to know if they're short or long gamma to know if that point is going to be something that extends stocks or it's going to bring them. It's going to kind of bring them down. I'd be inclined to suspect that it will work against it, that they are actually long gamma right now because the markets have been really volatile. So I'm going to bet that they've been long gamma and that might actually make it difficult for them to hold up above 4136. But let's see what happens. That's quite a ways away of a target for today, but I suppose it's possible. I had a friend who was 5'4" and no one could beat him arm wrestling. I saw him. Oh, I bet. Well, when you've got the short levers, yeah. And there's more people mailing me right now. That was my phone buzzing. I moved over, like I created that account on Proton Mail. But Proton Mail doesn't give you very good options for like filtering and things like that. Because like there was a couple of people that I talked to, and they all added me to their lists. So now I get their stupid list stuff every day. And you don't get really 120 in your biceps or your triceps? Well, I could probably bench press. No, I don't think I can bench press that much. I think the most I've ever bench pressed was like 75. But 120, that's just a Romanian deadlift. That's just in your legs. That's pretty low level beginner weights for most men. Proton is pretty secure, yeah. Maybe I just need to start paying the subscription fee. I'm looking everywhere. I'm seeing subscription fees everywhere. They're gonna nickel and dime us to death, guys. That's the future. I've seen the future. There's a couple of things I'm disappointed in, that's all. You mean no, Marco Polo. So when you're thinking about gamma, right? Gamma is really a call on how far a stock will move, right? So if we're having a lot of volatility, then you're going to price all of your options to say the amount that we're potentially move is high or low, right? So when you're a market maker, you essentially end up being long or short gamma. And what that means essentially is if you're short gamma, then what that means is that once we get to those key prices where, you know, like we have the most amount of positions on and stuff, it will actually increase volatility beyond that because all of the market makers were short gamma. In other words, they were set to make money if the market underperformed the volatility. And since it's outperforming, they have to hedge against that. And that exacerbates the move, right? So spot gamma, I have a video about this where I talk all about gamma and kind of how it works. And there's an affiliate link on that for spot gamma. That's kind of the website where I learned a lot of this stuff. And they have some really good data and analysis on that. But I don't know. I haven't read anything highlighting to me lately that there's a significant enough gamma position for it to be a huge concern to the market. The biggest thing that's going on right now today is that it's the last day of the month. Okay. I use my gamma. There you go. It's the last day of the month. It looks like that the flows in the S&P 500 are positive. So, you know, the treasuries did extend a little bit higher, but it was pretty mild. They still kind of came back to where we have the kind of the liquidity hole per se. I really probably should just get well, actually, oh, there's an Amazon Music app. Kind of afraid to download that though. Let me play it over here. Nope, it doesn't work over here. As an option approaches expiry, besides theta, it also experiences something called Karm decay if there is no drop in volatility, essentially delta shifting to gamma. So if the open interest near maturities are high, your gamma numbers can be very, very off. Yeah. Well, like I said, it's only been like a week or two since the last expiration, right? And like we've got 3 weeks to the next expiration. So I'm not convinced that gammas are going to be one of the largest flows today, right? I really think that what I would be more interested in today is what the end of month rebalancing flows need to be. That might have played a small role in what we got here in the treasuries, but I bet you that it's playing a significant part in the way that the S&P 500 has been moving the past week. Yeah, they do have end of month options. That's true. But that's not that much of the volume, though, is it? That's not that much of the volume. I don't think it's as much as all of these funds and stuff that have to rebalance at the end of the month, right? And the corporate buybacks, I think that corporate buybacks have been a big factor lately. It's pretty big volume, almost similar to SPY. Well, again, like I'm more interested in the volume in the individual stocks, right? Like, I don't know. The reality here is that I'm not an expert in that on ES in particular, and the current situation makes it difficult for me. Like, I don't have an explicit model that calculates these things out. I just go over the different factors that are available and which ones are strong enough to really create a significant move. And the way that we are at right now, we should certainly be on the lookout for such flows. But I don't have any information that suggests that the flows are going to be so one-sided that we're really going to get a strong move in one direction or another. But end of month rebalancing almost always tends to have, you know, some effect. It's just I don't know how directional it's going to be this time. Right now, the trend is up in the S&P 500, so it's probably not one that I'm going to fight. But obviously, I'm done for the day here. Treasuries are, well, you know, when we could have made maybe $20 going short from 2.69. Let's talk about what we got up for next on deck for next week, though. Yeah. Well, starts out with big numbers on Monday, ISM manufacturing PMIs. Tuesday, JOLTS and FOMC member Bullard speaks. That will be an important one, but that is late in the day. So then we come to Wednesday, services PMIs. Then Thursday, we get the Challenger job cuts, unemployment claims, trade balance. 10 a.m. Mester speaks. And then on Friday, we get non-farms. So, and then the week after that, we got CPI on a Wednesday. So we've still got a good 2 or 3 weeks of decent action ahead of us. Bitcoin has kind of been doing some interesting things. By the way, I haven't really noticed here, but since 8 o'clock, oil has taken another leg up. What do you think is up with oil? It's really gone, hasn't it? Oh, you know what? We never came through and did much on Twitter here. We should check that out. Brannigan Gerberd is following the move in oil. Nick Timmerell's the final Michigan survey of consumers' 5-year ahead inflation expectations in July pinned at 2.9 versus the preliminary reading of 2.8 and down from 3.1% in June. Mm-hmm. Okay, forecast of the month. Thinks Friday's Q2 ECI report makes 75 basis points the base case in September until the data breaks in a much better way for the Fed. Over the last year, private wages and salaries have risen at an average quarterly rate of 1.39%, the fastest pace in the history of the data going back to 1982. This is a print that's going to keep the Fed officials up at night and likely set 75 basis points as the base case for September. The monthly inflation and activity data are going to have to cooperate in a very big way for the Fed to step down from that 75 basis points half. So I'm like, I might have ended up being wrong today for the wrong reasons. You know what I mean? Like because they're basically saying the same thing that I was, that these are pretty aggressive numbers and that it suggests that the Federal Reserve is going to have to remain on its aggressive tightening path. So like, again, we are at 2.25 right now, right? And for September, the majority of them are saying a 50 basis point hike to go to 2.75. But if they hiked 75 basis points, that would put them at 3 to 3.25. So that guy, Nick Timmerell, okay, the Fed whisperer, is retweeting forecast of the month, Omir Sharif. I don't know who this guy is, but I'll start following him. If Nick thinks he's worth following, then I'm going to follow him. He's saying that it's going to be 3, and that's not what the market's pricing in, and that's certainly not the direction that the action is going today. So we could have some opportunities for a really big, for another 25 basis point change in the treasuries again. But it may be the case that they're more interested in the end of month action, or I don't know. It's I feel like that the reaction to the news today is not what I would have expected. Maybe my bearings are off a little bit because we've had so much movement as of late anyways, so much volatility as of late anyways, right? Probably lean into the microphone a little bit too much and hunch over. I probably shouldn't do that. There's Jim. We need to understand how to say his name. How do you pronounce that? That's an Italian name, right? Eoreo. 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 Eoreo Francesco. Eoreo Francesco. Eoreo. Here's Zero Hedge has a premium article out. Goldman warns of face-ripping melt-up as CTAs and buybacks will be out in full force. I need to be patient, but I really can see the treasuries moving in a big way at some point here. I think that these doves are going to get pounded. Like the inflation could just come back in their face so quickly. You know? And I don't know what data that they're looking at that really suggests that, you know, the Federal Reserve is going to only raise 50 basis points instead of 75. What's this one they have at the top? Floods in Kentucky, huh? Apparently, Pelosi is expected to arrive in Taiwan. Apparently, with the University of Michigan survey, Democrat confidence is one of the big things holding the economy back. Was the inflation number great? So I wouldn't say that it was like a massive beat per se, but it basically suggests to me bring back the 90s with a coupon rate of 8%. Yeah, right. The way that these futures get priced is kind of a little silly. That's one of the things that I've kind of learned from watching these micro treasuries and what the yields are there and everything, is that, you know, and you could try and calculate a yield for these futures. It's just like these prices are actually quite silly. It's not actually one. It's if you were buying a bond in the cash market, you wouldn't actually be paying 120, right? I digress. The inflation number was a mild beat, okay, but the expectation was already somewhat high, okay. So, in other words, if you are a believer that the market is going into a recession and that the Federal Reserve will have to almost immediately back off of interest rate increases, this data is not helping you. It's not helping you. And I agree with the Fed Whisperer and his buddy's analysis here that my base case is 75 basis points. You're looking on that Fed tool. I'm with that 30%. I think that they're more likely than not to do 75 basis points. If they did 75 basis points, that would put interest rates at 3, right? So we get more data next week. The problem is the PMIs have been kind of weak as of late. So will that continue? If the PMIs on Monday are actually better than expected, what are they expecting on Monday? Let's come back over here. Previous week. ISM manufacturing PMI. Previous month was 53. Forecast is 52.3. And before that, we were in the 55 range. Oh yeah, that was where they like. Okay, so in April they were expected to be 58, and they got 57.3, 57.1. Then they expected it to be 57.3, and it was less. But then in June, they thought it was going to be 54.2, and it was higher than expected. So if they were higher than expected again, and I'd say it's very uncertain. The recent history doesn't give us much to work with, but a lot of these numbers have kind of been disappointing. If that number beat, that could be the sort of thing that would help, that would maybe start the treasuries like really pushing the other way. Wikipedia changed the meaning of a recession. So like here's how you fight this sort of thing, Bilgen. Should I say fight this sort of thing? Like, listen, I have a political opinion. I do, you know, want my political ideas to promulgate. Okay. But I'm primarily interested in informing you. Okay. And when it gets into a argument of semantics, as Democrats love to do you notice that around almost every significant issue flashpoint that we've had in society in the last 5 years, that Democrats have attempted to redefine a term in relation to that discussion? They are obsessed with terminology and language that they think bolsters their case. So they are now here working hard to make sure that we're not officially in a recession. Okay? So what do? Don't call it a recession. We've had 2 quarters of negative GDP. That is what it is. The situation is, the data is what it is. You can't argue with that. If you just say, fine, we won't use the word recession. We had 2 quarters of negative GDP. In a serious conversation, I mean, in the general public, all they care about is whether it's a recession or not, right? But if we're having a real economic conversation, we just call it what it is. It's 2 quarters of negative GDP. That's not that big of a mouthful, is it? Don't we need rising unemployment for a real recession? Not necessarily. So there have been many recessions in the past where you started to see the economic activity leading indicators go down for quite a long time before you started to see the declines in unemployment. I think one of the things that you've got to keep in mind is that we are coming off of such a huge, overly exaggerated bubble market and coming back, that like what we've got right now was really just kind of like the froth coming out, right? So we've seen unemployment kind of tick up. We've seen jobless claims kind of tick up, but it's only now to like what regular economy would look like. So if these other economic activity, these more leading indicators continue to show contraction, and because the Federal Reserve has been raising rates and everything, that takes a little bit of time to be seen in the economy, right? So it is possible that we could continue to see that contraction, right? Eventually you'll see it drag unemployment down. But
Netflix, Amazon Prime, HBO, Showtime? How many streaming services are you paying for?
If I recall correctly, 2 quarters of negative GDP is considered a recession at only the Bank of England. uses that explicitly. Almost every other central bank and economic watchdog has other qualifiers and subpoints. Right. Well, in the funny thing is that a recession is not used as some qualifier for when people start taking trades or something like that in the stock market as some indicator or status about where we're at, right? It is a designation that is used well after the fact for economic research, right? So like when it would be officially declared a recession, it would be long after it's happened, when the National Bureau of Labor Statistics or whoever it is, I forget who it is, makes that call. So that's why, again, the actual definition of a recession doesn't really matter for professionals, right? You and I aren't going to be doing anything different whether they call it a recession or not. So that's why it's turned into a political football, because people know a recession is bad, and so you call it a recession or not, that could affect their views of the current economy. But again, I think that we see this, we've talked about this a lot today, right? Truth exists, guys. There are things that are true and that are not true. This is a fact of the universe. People want to come into this idea that, well, reality is just what we choose to believe. And yet, no, it's freaking not. Okay? No, it's freaking not. You can choose to believe that you didn't lose $40 today. It's not going to change the fact that you don't have those $40 in the account anymore. Okay? Reality is reality. Okay? The fact is, we've had 2 quarters of negative GDP growth. Period. The situation is what it is today. What you call it doesn't change that. So don't let them distract you with that conversation, right? The political conversation should be, there were policies that didn't work, and we've had 2 quarters of negative GDP growth because of it now. You can't argue with that one, right? Well, you can argue what actually caused the 2 quarters of negative GDP growth, right? That's the argument that we should be having, not over what is the actual definition of a recession. Who cares? Doesn't get you anywhere. You get what I mean? So I think that the risk with that strategy is that you risk ceding ground to the leftists saying, well, okay, now they've successfully redefined a recession. I don't think that they actually have. I think that the definition of a recession stays the same. Okay. It's always been that this board specifies when it starts, and that it was at their discretion. That's always been the case. Okay. But let's pick and choose our battles. What's the battle that really matters? The battle that really matters is that we understand why we got to where we are and what the causes of that were. And that if it was bad policy, that we understand that it was those bad policies and why those bad policies led to those bad results, and we avoid doing them in the future, right? That's the argument that we should be focused on. It sure is funny to watch, though, right? I totally get why you guys would be, why the internet be so interested in it, right? Because the Democrats are really like bending over backwards and making massive idiots of themselves trying to define the term. And like, here's the thing. So we spent all this time arguing over whether the inflation was transitory. Then they have good reasons to think that maybe it was transitory. Sure. I think that they had a good case, but they were wrong. Right. And the issue was the way that they took it. Anybody that said, no, that's not, the inflation is going to continue higher, and here's why, were said, treated like pariahs, treated like idiots, when the economic reality of things were that nobody really knew. I mean, we don't really have any kind of comparable history to really see what this was like. A complete worldwide supply disorder. We've never seen that before, guys. How are you supposed to know what's going to happen? You can know a lot about economics and you can make predictions and stuff, but our ability to predict in that situation is very low. Okay. So the problem wasn't that they said, oh, we think it's going to be transitory. The problem was that they said, we know it's going to be transitory and we're going to make all of these decisions off of it. And we're going to tell you all that this is what's going to happen. And if you say that anything different, we're going to treat you like you're an idiot. That's the real problem, right? I've been laughing to all the way to the bank here with the freaking, good grief. We were at like 2% at the beginning of the year. It was like a whole 1 percentage basis point that I benefited from off of these idiots that insisted that the inflation was transitory. And the risk that you run now is, okay, first you said the inflation was transitory. Now you say we're not in a recession. So what's going to happen if in 3 months that we are very obviously in a recession? What if the next 2 quarters are also negative quarters of GDP? And so now we've had 3-4 quarters of negative, a whole year of negative GDP growth, right? And now you want to come out and you want to say, oh, well, we are in a recession, but we're going to get out of it. And this is how we're going to do it. How can you expect anybody to take you seriously at that point? Like, seriously? And that's the risk that these guys are running. And I have to say, Janet Yellen in particular, hun, I shouldn't call her hun. That's very disrespectful. Why? I don't know why that came out of me. I apologize. But Janet is not worth it. You do not give up all your credibility just to toe the line. Your job should be to tell them the truth. And if they don't want to listen to the truth, you should still tell the public the truth. Because look at how it's worked out for you. And what you're doing is you're doing damage to the office now, right? Can we expect to believe anything that the Treasury Secretary says now? Right? It creates a crisis of confidence. It's not worth it. So let's stop playing this game where we pretend we pretend we know what's going on and marginalize anybody that disagrees with that. Because that's not how a market works, and it's not effective for society, and it's undermining our financial system, right? It would be a bond trader giving macro analysis of the economic scene, so how keep preaching. Oh, thank you, Mark. I think that was a compliment. Because we got to understand the macros, right? Because that's what this is about. Is the Federal Reserve going to raise rates or not? I kind of think that they're going to do another 75 basis point hike, but we'll see, guys. I got to get going. Have a good weekend. Stay profitable, friends, or at least don't blow it all. We've got plenty of stuff ahead of us in the next 2 weeks, so get rest.